Bismillah ar-Rahman ar-Rahim. Today we are going to start planning, control and decision making, and with some case studies and examples we will discuss in details what it is and what to do. In that way, I have already during the first lecture what is my education and experience, this I explained in the first lecture. And also, now we are going to start this strategic planning and control. This topic we are going to start, and we'll have 8 topics. We'll have to cover the role of performance management, planning and control at strategic and operational levels. What's the difference? Strategic planning versus short term, localized decisions, SWOT analysis, and performance management. So, these 4 topics we will cover today. Next lecture, tomorrow, we'll discuss the strategic models and performance management, benchmarking, and the changing role of management accounting. This will be the next lecture. Case studies and questions will be continuously will discuss on daily basis. All the lectures, case studies and questions will be part of that. So now we start. We have discussed this in the first lecture, strategic planning and controls and decision making, what it is. So just for review, strategic planning, what it is, simply the process of deciding on objectives of the organization, what your company or organization, what they want it, what they want to achieve something, and what they should do. Simply, management control is the control through which you want to achieve your objectives. What do you want to get something? You do in the right way and don't miss anything. We discussed in the first lecture in details on that. Operational controls are during the practical experience when you will do this practical. So, what to do and what not to do, and planning will be the part of that. That planning is simply that if you will have different alternatives available, then what to select. This is simple way. That, for example, just I gave an example that you are going from one city to another city, and you have 3 options available, 3 different roads are available. So then you will make a decision. I will go from road number 1 or number 2 or number 3. 3 options are available. You select that road number 2 is the best for you. So you make a plan, your tour on that. And your control is that how to, what should be your speed, how should you want to take. This is an example of control. Then strategic decisions are for the long term decisions, that what we will do and what not to do in you can say for a long term decisions. An example is that you want to get profit. Simple way. So you have, let's say, products. You can prepare 10 products. So your strategy might be that through the market you know that your product number 3 has huge demand. So your strategy is that you focus on the, especially on the your special product number 3, and you work, focus on that to get maximum sales. And addition to that, the all the other products, you also prepare that as well, and then whatever you profit that as well, okay, but your focus will be number 3. This is an example of strategic decision. And control, we have discussed that already, that how to control. Now we discuss with practical examples. Last time I gave an example. Now we will give the answer in details. And if you have prepared this assignment, please share with this. And now, right now, when we will discuss, you will match your decision. You have made it, and with my lecture, you can match with this, that what decision you have made, whether it's right or wrong, what it is. So you will get it. Simple example is that you are going to purchase some parts in the market, and when you go in the market with the supplier, you go to them and review the parts, and then particular items are not available there. Then what you will do? This is your decision. So especially I requested you to take 5 questions. What parts of this activity would you describe as planning? First of all, you'll have to make the plan. What plan you have to make? Just think about it. Because many customers have requested you to prepare cars, and now you are making the planning. What plan you have to make? Think about it. There are several examples of decision making in the story. So let me know that what decisions you have made. What parts or part of this activity would you describe as control, and what was your mistakes? So now I will give the answer in details, and just match whatever you'll have, make the decision, what was right and what was the mistake at your end. So this will be your exercise, will help you to pass the exam in ACCA. Or you are the general manager. As you are the general manager, what you do to instruct the purchase manager? What decisions you will make? What risks are possible in your plan? What will you do if some risks will happen? What type of risks you accept right now? And now I am going to explain in detail, and you match your decision with I am suggesting you right now. So look, purchasing cycle in any company, they work in this way. You can see the first step is to start this process. You are now, as the history is that many customers are asking to publish to product, especially is your cars, and you are now planning for production. So definitely you will need many parts. So your first step will be purchasing plan. What you will do, in addition to that, you will also, with the history, you need supplier pre-qualifications, that from which supplier you want to purchase, and during your history you know the experience based from the suppliers. So you might have 10, 15, 20 suppliers, and first of all you'll have to check that whether qualification of each supplier, whether they are giving good price or bad price, and what is their quality as well. So just, you might have, if you have already think it, so that's okay. your history is there. But if you don't have any history, then you'll have to first start that which suppliers you are thinking about it, that these are the suppliers, and all of them you go to them and you see to see their pre-qualification. You will do whether which supplier, one supplier or many suppliers are better for you based on your prices and quality. Then contract with suppliers as well, that okay, we will purchase you continuously for long time or short time, whatever you want to make a decision. So look, this is an example. Then purchase order for imported material. Some materials may be imported in some other country. You will request from the supplier of other country, you request purchase order to them that sell these products to us. Or it may be purchase order to local purchases from your country. You get some good suppliers, you will give purchase order to them. Purchase order is what? It is simply a document that you ask the supplier to give these products to us, and before this you have already discussion is already done, the prices you agreed with their supply, their prices and quality, you have explained and checked that this type of quality of these parts you need it. Then the next step, what will happen? Goods receiving. That supplier, definitely they want to sell it, they give you the supplier, and goods receiving, you have received it. After receiving, then you will not only receive, but you'll have to check that the quantity of all the parts are okay, what do you need, and also you'll have to check the quality as well, and then based on that you'll have to make the payment. Then supplier evaluation you will continue, because with the parts what you have get it, now in the production you will use these parts, and you'll have to check that whether these parts are good or not good, or some weakness is there. So this is supplier evaluation you will continue in future, and that's it. This is the purchasing cycle in any company. Whenever you will work, this is in that way. So this is just an example of control, especially I have taken. Now you think about all these 5 questions, their answers. Based on this, I have suggested you the purchase cycle in any company work in that way. Think about it, what answer you should have for all these 5 questions. The role of performance management is strategic planning and control. Performance, I have already explained. Supplier evaluation, what it is or not. Performance management, you need your performance improved. Your strategic plan is also, this purchase plan is part of your strategic planning. And controls examples, you get it. So performance management system you will need, because to get all the information you will get it, this information, and based on that you can make a decision. Performance management system help as an organization measure how well it is performing against its goals and objectives, and to identify where performance can be improved in order to help the organizations achieve those goals and objectives. Simple way, that what do you want to get, whether you have get it or not get, this is performance management system will get you the information that you have achieved this, and this your objective is not achieved. Why not achieved? So you'll have to give the assessment based on yourself, and what are the weaknesses you have to improve. So these are some examples. Key performance indicators must be there. What it is? Key performance indicators that identify that this is good or not good. Example I can share from sales. Your objective for 1 year, that you want to get a profit, or simple sales right now, to get $10 million you want to sell out. Key performance indicator example is the reality of sale, how much you have done. Like every month or every week, you check your sale, how much you have sold out, and what is your target of. Your target is $10 million, and actually you have achieved in 1 week, in 2 weeks, in 3 weeks. Every weeks you will review it. This is an example of this performance indicator, that whether sales, how much percentage you have achieved right now. And definitely at the end of year, then you will see you might get $11 million you have sold it out. But your target was $10 million, but actually you have sold $11 million. So what do you think? Performance is good or not? Think about it. Now we assume another way. Your target is $10 million, and actually you have sold out only $6 million only. Target was 10. Then what do you think? Your performance is good or not? Make your decision. So this is an example of key performance indicator. You will also need financial planning, that what expenses you'll have to make, where to invest and definitely your budgeting must be there. Budget example is like sale is $10 million, and purchasing and expenses you have already calculated, and your target is, let's suppose from 10 million you will be able to get the profit of $2 million. So this is the budget, your budget, which has $8 million expenses and $10 million of the sale. Simple example I'm sharing with you. So now this is through the budget you will see the actual results, and key performance indicators will inform you how much you have achieved today. And with the time you will review, and let's suppose in 1 month your performance is not good, so second month you may give great struggle to achieve the target of second month and the third month, and definitely you will be able to achieve yourself. Then you will also need business process re-engineering as well. What it is? Business process is simply that you work in that way, whatever how way you are working. So this is your, but re-engineering means that with some changes you make a decision to make the changes. I will now share some examples of like the same purchasing example, that how you will change this re-engineering. Re-engineering means to change your process, to improve yourself, because you want to achieve your target and you want to achieve more than your target. This is your objective. You will also need to identify risk management. Key risk indicators will inform you that now this risk is there. that you have, let's suppose your target is $10 million and you have not achieved. So this is KRI will, key risk indicator will inform you that these weaknesses are there and why. You'll have to think about it. Business intelligence, you should need a software where, like some example is data warehouse, you will review the warehouse, data mining system should be there, that what are achievements, why you get it, and what you have not achieved, and why is your failure. So this is, and similarly, analysis you'll have to do, you have to work, you have to see your performance in the time right now, from like to start to today, and what you have to achieve, you need to improve your business. Then we come to another different hierarchical levels of the organization must be there. Hierarchy of your organization might be like you are an accountant, so in an accounting department you should have like many accountants, and all of them reporting to the chief accountant. Then one chief accountant might be working on, let's suppose, purchasing payments. Another chief accountant may be working on reporting. Third chief accountant may be reporting to, they are working on, let's suppose, especially your budget achievement. Like three chief accountants are working and they are reporting to the finance manager. Finance managers may be two persons. One person is for accounting and another finance manager is managing the treasury, especially the banking. Okay, and both of them report to the chief financial officer, and the financial officer should report to the chief executive officer, CEO, and CEO will report to the board of directors of a company. So this is hierarchy of your company, your organization, how to do in that way. Performance pyramid is an example of how, who will report to which person. So this is your pyramid of the organization, and then balance scorecard. This we will discuss in detail tomorrow, that how you will get in detail the analysis to get how much we have achieved and what we have not achieved. Now we come to the next topic. Management accounting information is performance. This is your topic of this paper 5. P5 is part of that. As an accountant, what you will do to measure performance, that how much performance we have get it, what we have not get. This is responsibility of manager accountant. The control the business, whether the business target of or standards what they want, what is your budget, actual performance is the reality. This is an example of sale I have shared with you. Now think about purchasing as well. Like your target is that we will purchase, let's suppose, 5 million and plus 3 million expenses, let's suppose. So now you will calculate everything, and in the reality you will match with this, with your target of purchasing and expenses. So then you will, and also you will give the target of sales as well, and then you will match and get the profit or loss, whatever it is. To plan for future, expectations in future. that what with acceptations that in future what will happen and what you will think about how much sales you will accept and what expenses you should do, and this will be your simply what as an accountant what do you will do, you will prepare the plan, but plan is not final. You will give to the directors who will accept these plannings, yes, but they might think that no, we'll have to do in that way. You will make the changes and then they will make the signatures, and then this planning, the process will start working. To make decision strategies based by the directors. Directors will make the strategies that we will work in that way. Long term or short term plans they will do. As an accountant, what do you will do? You will only give the information to the directors, and also you can give some suggestions as well, but the decision is the directors. Uncertainty and risks, that what might happen in future, this is the risk. Uncertainty means you are not confirmed that whether it will happen or not happen, so you'll have to identify the risk in two ways. One is likelihood, another is impact. Likelihood is how much chances that this risk will happen. Let's suppose sales will decrease in future. What are the chances? You, based on your research, as an accountant, you will inform the directors that it is accepted that around your sales will decrease 50%, and we hope, based on the research, we are accepting that around 30% this risk is there. What is this? Is simply 30% chance that your sales will decrease. It may. Why? What's the reasons? You will give the reasons that why. It may be 60% or it may be 80% decrease the sale. This may happen. So whatever analysis you'll have to do this. And the other effect, you'll have to think the impact. Impact is the result, that if the risk will happen, your sales will decrease, how much your profit will decrease, or whether it will become a loss. So all this analysis you'll have to work in detail, and based on that, the directors and CEO will make the decision that okay, this we should work, this we should not work. Now we come to the planning and control at strategic and operational levels. Now these are the types of strategies and operations. Strategic planning, the overall process of deciding the goals of an organization and the strategies of attaining those goals. Simple way, that strategies that we will work this in that way, and this is the right way for us to work in this, and we'll be able to achieve the objective. This is simple way. Goals, these are your objective. Strategic control is focuses on questions of whether the strategy is being implemented and planned. That what do you want in the planning, whether you'll be able to achieve this or not achieve. So control is to control in the right way so that you can achieve your target. To achieve that target may be your profit. Or if you are not a business company, you are an organization for a trust to help people, so you will have some targets and whether you will be able to achieve this or not. So control is to achieve your targets. Then you'll have to also think about different ways especially organizational control, that what do you want and how much chances. Operational controls are the practical work you will do. Operational performance measurement tends of focus on much more detailed information and on a much shorter time period. Operational controls are on the practical, like purchasing immediately, sales, or similarly accounting, your IT, all the practical activities. You'll have to think what to do and what not to do. This is your operational control. Then operational planning will be the that your needs to much more systematic and detailed, that strategic planning, that your strategic planning how to achieve, and on the practical exercise you will identify that this will be the plan of sales, this is the plan for purchasing, this is plan for your financial statements, this is the plan of your IT department to prepare the software or to improve your software, whatever it is. These are just an examples. Similarly, your different other departments will have their operational plans. Operational plans should contain clear objective, details of activities to be delivered, quality, standards, desired outcomes, resources requirements, and timetables. That okay, like timetable will let you that okay, who will you will work on that time. You will work on that time. Delivered. You will deliver what you will deliver. The salesperson, he or she will deliver through sale. Accountant will prepare at according to this time the report. Quality standard, what they will do, they will check the production to see whether this quality is good or not good and what are the weaknesses to improve this. These are just examples. So all of this is the part of your is this P5 is the part of these things. Now I come again to the purchase cycle. This is the case study. We have shared you that the purchasing cycle in this way, but every step will need details. So how you should do this? Now see, purchase planning. So what they should do for materials, parts and local purchases, all of this is part of this. This is a reality of a company. I worked on that and I can share with you that in what way this is practically is the part of operational control and planning. So see, start the process will start. First, they should do refer to the business planning process. The business planning, based on that, they will make a decision, identify needs to purchase. We need to purchase PM. What is PM? PM means purchase manager. He will make the decision, okay, we'll have to purchase these material, parts, etc. Because all this will be what you will do. If you have a factory, you will have to prepare the products, or it may be simply in some business, it may be simply you purchase from something and sell to other people. So whatever your company or your organization is working in that way, so okay, make the decision. Then the next step will do prepare cash flow and check availability of budget, that who will do purchase manager PM and SFA. SFA is senior financial analyst, what financial analyst and purchase managers will think whether the cash is available for us, and according to the budget whether we'll be able to purchase or not. So this is part of the planning right now they are doing. Then enough budget, whether if the budget is enough, then purchase requests, requisition, purchase PC is what this is, purchase coordinator person who will write the document that okay we are going to purchase. But if budget is not available, then get approval from the chief operating officer from them. That sir, we will need to purchase these things in the factory, so please approve this one budget. Okay, but if budget is already available, then it's okay. And then the next step will be approve the purchase purchase requisition, a person who will request from the suppliers. But right now what he or she will have to just to approve it, fine, that is done, but according to the budget this purchasing is okay. Then single sources means that whether from one supplier you want to purchase or many suppliers. So definitely you will have to make a decision. This is all this part of this planning. If only single source you have available, then refer to the quotation process. Then the next step you'll have to make the quotation. But if you have many other supplier available, then refer to the purchase order process. You will start this one. Like if there is only single supplier is available, then you'll have to go the next step of purchase order. If not, like if you have many suppliers available, then you'll have to get quotations from different suppliers that we need these items, what is your price and what is your quality. So then you'll have to make the decision that which supplier you will have to purchase. So this is just all these steps are the part of purchasing planning. This is just the planning right now. Then supplier pre-qualifications should be there. Whether suppliers are reliable or not, you'll have to think this one as well. That identify suppliers. Who are the suppliers? You'll have to give a research in your market. Who are the reliable persons? Contact new suppliers as well to register it in approved vendors list, so that in future it will be easy for you to select the supplier. But if you don't have any vendors list, then you'll have to prepare right now. Then prepare pre-qualifications form. Definitely a form should be there that all of the supplier, whatever suppliers you came to you'll have to get all the information about them, so that what is their quality, what is their prices, what is their factory, and everything you'll have to think about it and make okay these suppliers are reliable for us. Then definitely evaluate the suppliers against criteria and variety, accuracy and completeness, whether they can give complete products in what time, how much time. Definitely you will get all this information from the supplier. On not only one supplier, you will request from many suppliers, and then based on that approve the pre-qualification form that okay this supplier is reliable, we can purchase it. Who will sign it? First purchase manager will sign, then also deputy general manager will also sign, and then general manager will also sign, to make sure that okay all of them agree that all these suppliers are these suppliers are reliable, or one supplier is reliable, or maybe many, 2, 3, 4, 5, 10, whatever. So first of all This is all this process of pre-qualifications. Then prepare supplier master form. This form should be there to give to the finance, so that finance people know that these are the reliable, and make sure that whenever they purchase it, so finance department or accounting department will be able to sign to give the payment to these people. Okay. Then information, the supplier. So this is only one step. Second step. Then we come to the third step. Contract with suppliers. Refer the supplier's registration process. This already we have discussed right now. Then negotiate terms and conditions. Who will do this? Purchase coordinator person as well as purchase manager. They will go to the supplier and then discuss in detail, negotiate with them. No, sir, your price should be this. Let's suppose supplier is giving the price. Let's suppose for one part is, let's suppose, $100. Say no, sorry, we'll be able to pay you $90. And then negotiation and the process will be there, and then draft contract will be there and get from supplier, because this draft contract will be able to make a decision whether to purchase from this supplier or some other. Definitely for different suppliers, purchase manager will go to different suppliers and get this quotation from them. Review the draft. Definitely general manager and deputy general manager will review and then get supplier signature. Then definitely purchase coordinator person will get supplier signature as well, whether these are signable, like whether the real the in the supplier company, whether the person is authorized to sign it. So you should know this and then sign the contract. Fine. And then maintain suppliers database. Database should be there in future as well for this supplier, that okay, this is your reliable. Then next step you will do getting quotations and selection. Now this you are going to the next step of your selection. Then okay, select the prepare respective vendor, which vendor you want to purchase it. Then prepare request for quotation. You will get the quotation from the supplier. It may be 2, 3, 4, 5 suppliers, and then general manager will approve it, that okay, this is request quotation is reliable for us, price is the good for them, and also their quality is good. Then obtain technical financial quotation from vendors as well, should be there as well, because not only the general manager make the decision, but also finance should also review this one, and if they have some comments, they should take care of them, that okay. Also if finance department also agree with some, conduct evaluation of technical quotation as well. This technical quotations who can do, definitely it will be your factory manager. He will review this, okay, fine, this is okay, good, this is good, this is not good, and then conduct financial evaluation should be there, and then approve the selection, that which supplier we will want to purchase. Look, all these steps you'll have to think about it, and then you'll be able to make a decision. Okay, now you have selected the supplier, prices and quality and time all is agreed with them. Fine, now they will write to do the purchase order. Prepare the purchase order, then verify the purchase order. Deputy general manager will review it, okay, according to their decision whether this purchase order is correct or not. then approve it, and then request finance for operating letter of credit, also to make sure, because finance people will opening letter of credit as well do it, because as a result of that, because supplier also need money, na? So finance will check and sign to make sure that okay, payment will be given to supplier as well. Fine, okay. Then send the purchase order and get confirmation from supplier. Supplier will also see okay, and then they will also sign, and then information inform the custom clearance and warehouse about delivery time. Time should also be there according to this purchase order, and if it is coming from other countries, so then also make sure that custom clearance is there in which time. So all this part of this one, and then track the delivery of goods. Now purchase coordinator will review, think about it, get the information which time you will deliver and what is the track of that, at which time it is coming, all the products. Next step you can see purchase order. On that further they'll have to think or that discuss the matter. Your especially salespersons, general managers also think, then approve dealing in the product. General manager will sign this one, fine, this is okay, and then send inquiries to the supplier. Then they will give to the supplier inquiry from them that okay, whether you have all the products are okay, now they are available for us, okay, receive offers and prepare comparison sheet should be there. With the comparison sheet, whether okay, this is okay, it is according to right time, it is working on this, and then select the best deal will do the general manager, and then prepare the purchase order. Now see, right now this is still the part of the purchase order as well. After you have given the purchase order, definitely you might have to give some advance payment to the supplier as well, which may be some percent according to your deal. It may be 10% or 20% or 50%, whatever it is, and then goods you will get it. Now see, this is divisional purchasing department will see inform the customs clearance. If it is coming from other countries, then custom clearance will be there, otherwise no need. Then it come to warehouse about delivery time, that which time the products came to the warehouse, and then clear goods from customs, because custom you need especially in the other country. If you are getting it, then prepare landed cost, how much cost is there for this, because purchase department's responsibility to make sure that according to the budget whether the cost is okay. In the warehouse they will receive goods, check quantity and quality as well, both these things, and especially warehouse supervisor will review this, and then quantity and quality of goods are okay or not. If not satisfied, they refer to the claims and returns. This will be another step they'll have to do this. Sorry, this quality is not good, or how much products are good, which these are not good, and quantity is also less than what they need it. Okay, if it is satisfied, then purchase department prepare landed cost, how much the cost is for getting all the products. Also it should be approved by the general manager, and then it came to finance, because now if they are satisfied, then the payment will be there. This is in the finance department. What they will do, advance or final payment, whether it is advance or final. If it is just an advance, then what they should do, prepare payment request with attachment. They'll have to see whether the documents are okay. According to that, fine, that's okay. But if it is the final payment, then finance should refer to the goods receiving process, whether goods received or not. Then they'll have to check receive invoice from the supplier. This is purchase coordinator will give the document, we have received the document, we have get it the products, okay, good. Then check the invoice against delivery note, according to the delivery whether they have get it or not. Prepare payment request. Then purchase coordinator will give request to the finance department. Then we have get all the products, quality is good, quantity is good, please give payment. Fine. If there is any claim that if quality or quantity is less, some products are not good, then also purchase coordinator what will do, receive information about the claim, that this claim should be there. Also general manager will approve, check, and then this information will give to the claim to the supplier that sorry, this quality is not good, so please came back your products. Or if it is good and but quantity is less, please give also this one. Then follow up with the supplier. You will coordinate again, discuss with them, then receive the credit note payment. That okay, fine. Or otherwise, if they have already given advance payment to the supplier will give back the check back to them. Okay, you get it. Then send the credit note to the finance. Okay, we have get money back from them. Then suppliers evaluation should be there as well. Prepare evaluation forms and suppliers as well, because what's the quality, what is quantity, whether it is good or not good, and note comments on that. And purchasing, how much it is done, sales function was working according to it. They should, because sales people have to sell the product, so they'll have to review this one, that suppliers evaluation, whether their products are good or not good. So fine. So you can see all these steps what we are doing in that way, because to make sure the control. And this is just an example of purchasing I have shared with you, but for many other works, for sales as well, you will have the same procedures as well, policies and procedures on that as well. For payment as well, these will be there. So all this control is to make sure that your company is working in the successful way. Now we come to the differences between strategic and operational plan. I want to share with you. Strategy is for long time, operations is for short time. Strategic is broad brush target, that if target was okay, your target of your profit was $1 million, but reality is not this, okay, they may make some minor changes, fine. Operational is details of everything, because operational example of purchasing I've shared with you, but strategy is at the overall view out there. Whole organization about that the strategy work, but operational planning, it is part of each department separately. External inputs with the wide variety of data types from the wide range of sources. So definitely this for strategies, long-term people, usually directors and CEO, they work on that, And then external focus, that their focus is for the market as well, how much demand and what are the dynamics going on. And then future oriented, their focus is to get profit in for long time as well. And then control, feed forward controls as well, to make sure that controls are okay or not. Long term focus is there, and potential of double loop feedback, what are the weaknesses are there. So this is all responsibilities in strategies. Now we can also think about the operational planning, because their focus is on some minor things. Their focus is on short term, and they work on different departments. They work on this mainly internal information they have, and this is not the long term, and external information is not available in different departments. Up to some extent they have something, but not 100% information they have. Their internal focus is to just to achieve their target of their departments. That's it. Like for example, for sales department, their focus is not on purchasing. Their focus is more mainly on sales. Similarly, the purchasing department has focus on purchasing only. They don't take care of sales. So this is the issue right now. But the overall review is done by the directors and the CEO, because the strategies they have to prepare and manage according to it. More concerned with monitoring current performance against plan. And this happens normally, that operational plan is just focus on their some small and practical work to work current performance only. They don't focus for an overall review. Mainly single loop feedback. Performance must change, not the plan. So usually they make a plan one time and they work according to it, but the strategic position people, the directors and CEOs, and even sometimes general managers, they make change the plan as well according to the situation. So this is the difference, both of them. Now we think about linking strategies and operations. Now this is an issue, that operational plans and objectives should match with the strategy at the long overview, otherwise it will be a problem. Operational must match with strategy. Some examples are, you are the CEO, let's suppose, of a company, plan to total quality management just in time. You might have studied already in other papers, already you might have already studied what is just in time, that in right time, exactly time work according to it. And quality management is how to improve quality of your company's performance. And then activity based costing as well. Strategy for dealing with a high level of customers complaints. The company was trying to improve quality and speed of delivery, controlling cost, but it faced a number of problems. So this is a problem, this is a scenario, and this is reality of many companies. I've seen this one. Okay, this problem is there. So now, unrealistic plan. Actually, some CEOs, they make some plans which are not practical. Inconsistent goals. Inconsistent, which is not consistent with the reality. This is the problem. Poor communication, because the CEO or directors want to do in that way, but their team of different departments, they don't know it. This is an issue. Inadequate performance measurement is not there, because performance measurement is not available or not proper available, then it become a problem, and as a result of that, CEO and directors want to need something, but it does not happen in the reality. Your customers might be complaining. So this happens in the reality. And this, your P5 is working on this, that how to resolve this one. This is the issue. You need to improve, definitely. This is part of that. Strategic control should be there. Factory competitive strength should be there, because your factory competitive strength should be there, so that with the competitors your achievement may be better. False alarms must be there, because if there is some problem, some alarm should be there. Milestones of performance must be there. Milestones, an example, just for a sale example, I've shared you that let's suppose this is 1 year is your period of sale. So you might think on weekly basis or monthly basis that okay, first week sale is you have achieved this one, second week this much, third week this one, and with this you match with the target, and then you can think that okay, let's suppose in 20 months you have get the 50% target achieved, which means it is great achievement you have done. So it means your results will be better. Or if it is less than that, then the remaining time you more focus to get the targets. This is an example. So that's why milestones should be there, so that you can identify that okay, this is working in the right way. Gap analysis must be there. Gap analysis is that what do you want and what is the reality. You match with this. This is gap analysis. Strategic control system must be there, so that according to the directors and CEO what they want, all the team of different departments, they know it and they work according to it. This should be there. Financial and operations reports must be there. Internal audit reports must be there, which will identify the directors that what's the reality. This should be part of that. Risk related to your company. What risks are coming to this, or it is accepted that this risk might be come to this company. And also review on the industry as well, because what happens that one risk come to one company, the same competitors will have the same risk. Let's suppose that customers you are selling in credit, and many other competitors are working on it, and let's suppose if your customers are not giving time in right time, so it might be the problem, the reasons may be in the economy of the country, and as a result of that what happens that all the industry, all the companies of this industry, they will have the same problems will be there. So this assessment should be worked at the industry level as well as at the company level, and criticality should be there, that what risks are more important for them to make immediately make the decisions to improve the scenario. This should be there. Linking strategies and operations must be there. You need what you should do. review changes in the environment and your industry. If risk is coming to them, you should make changes. Some example, like the risk is, I share, the credit risk is there. You make change, you might think that okay, we minimize credit sale and we focus more on the cash sales. This may be your strategy, might change. Or it may be that okay, we will give credit but only first give research whether the customers are reliable or not to give credit to them. So look, this is an example of changes. Competitive advantage, you want to need it, you should check, because this is key performance indicator of you. If competitive advantage you have, whether you are maintaining it or you are losing this one. Or if competitor have this competitive advantage, you will make a strategy to improve yourself to get competitive advantage more. This you can do it. Focus attention on what matters in the long term. Definitely, long term you should focus more as well, because maybe possible that within first month you will get a good profit, but for a long term, maybe in 5 years, your company will be in the losses. So that's why you should research on long term as well as short term as well. Identify and communicate drivers of success. That to get the success, who will be the driver? To get profit, to get achievement of your company, how you can get it. Think about it. Support organizational learning. You should get more learning as well for your team so that you can improve more and more in future. Provide a basis of reward. Definitely the directors should give reward to your team as well, that whoever has get achievement also give award to them so that their motivation will improve. All these suggestions, what we are giving suggestions, this go to the CEO and directors. And but you will think that what we should do, you are not the directors right now, you are not the CEO, so just right now you are a student, but in future you might become a director. And right now, if you know all these things, so definitely up to some extent right now you will work it, and you know the mind of your directors and you work according to it, and you will get some achievement better and you get more promotions as well. So that's why you are studying right now, and your benefit will be in a long term. This is the reality. Characteristics of strategic performance measures. How to get this measure to give the strategy performance? How do you know? Measurable. Definitely the result should be in the numbers as well as in the qualitative and quantitative analysis. Both of them should be there. Quantitative are more clear, like for your sale or profit or expenses, you know it, but qualitative as well analysis should be there to see whether your performance is good or not. Meaningful, this should be reasonable so that you understand it. Defined by the strategy and relevant to it. Consistently measure. You need to consistently review your performance, not today only, but you'll have to review tomorrow, then next day, next week, next month, next year. You'll have to continuously measure about yourself, whatever weaknesses are coming to you, so you have to just improve this one. consistently measured. You need it and then re-evaluate it regularly. You need it. Otherwise, if you leave it today, you have see your achievement and you find it good, you just ignore for everything in future, then definitely in future your competitors will have improvement by themselves, and their competitive advantage they will get it, and you lose yourself. Acceptable to stakeholders, you should acceptable all what the target of stakeholders, your especially owners as well as all the stakeholders, they should be satisfied with your performance, and budgeting and actual results should be there so that they know that you have achieved this one, and as a result of that your performance will be better. Motivation and evaluation, you should do this one. This is the psychological analysis of your performance for you as well as your each team person, so that as a result of that you will get achievement in future as well. Strategic planning versus short term localized decision, this we discussed already. The differences, just I share with you some details. Impact analysis should be there. Impact, there is a danger that decision taken by local managers may not always be aligned with the longer term strategic plan of an organization. The highlights the importance of goal congruence throughout the organization must be there. I can share some examples. Like, for example, your long strategy is to achieve maximum profit. You do it, you are working on that as well. And for a local manager, let's suppose local manager is a manager, sales manager of a city. To achieve his targets, he might sell through credit more. If the money is coming in time, then it's okay, that's good. His or her performance is good, but it may happen that they are giving credit sale to some unreliable people. What will happen? Your sales, his targets will achieve, but your profit will not come to you. Your cash flow statement may not be good as a result of that. This may happen. So think about it. So think about that as well, for long term as well as for the short term as well. The importance of goal congruence must be there. Mutually supporting must be there. Your short term targets should achieve as well as in the long term as well. So you should review it every time so that you know that your result is coming right now good, and in future should also think about it. Trade-offs between long-term and short-term objectives. Sometimes it happens that if you achieve something in short term, but it may result in a loss in long term, or a reverse may be there. That long term you may get achievement, some profit, but right now you are giving losses. This is a problem. This trade-off you'll have to make. Sacrifice of longer term objectives should be there. Right now you are achieving good sales through credit, but may be possible that cash flow problems will be there in the long term. This is an example. At a reverse of that might be, right now you focus more on cash sales. It may happen that, okay, you are achieving right now, but you might see that your competitors are giving credits. As a result of that, their sales are achieving, and their research is also good because they are only giving credit sales to reliable customers. So, as a long term, your focus problems might be there. Right now, cash is coming, but in future, cash may not come because sales are coming to the competitors. This may happen. So, think about the reality. Whatever the situation, according to your country and your industry as well. Postponing or abandoning capital expenditure projects. Sometimes you will have some problems in cash, so you think that, okay, this capital expenses, what they are, this is your, especially the cash you are coming right now and not enough. So sometimes you postpone some projects for future. You may think about it. These are not the forever you think about it, but for sometimes you'll have to make decisions according to the research. Cutting research and development expenditure. Many companies, if they have some problems in cash, so they don't give enough money for research right now because they might have problems in that. But definitely, if they give research right now, they will not be able to get profit or sales right now, but in a future, you will get huge profit. So now it is their decision whether to get profit right now or for a long term. Think about it. Reducing quality control to save operating costs to minimize their cost. Reducing the level of customer services sometimes just to do it, why, to just minimize their expenses and get profit right now, but maybe possible in future your profit will decrease as a result of that. Cutting training costs or recruitment might be, these are some examples only, and these are the reality I have seen in many companies as a consultant. So I have seen these decisions they have made. For sometimes they get it some profit, but for a long time they will have problems. Centralized strategic planning and short term localized decision making. What you should do is you should make especially strategic planning centralized. This should do by the directors, and for short term as well, you should give up to some limit to your junior managers, but most decisions should be at the top. Long term view versus lack of broader trends. They know it that what are the trend going according to the industry, about their country, about everything should be there. This is better, and authority metrics should be there. What it is? Let me share example of authority metrics. Give authority to local small issues like to managers, but give authority for big issues to the directors. It should be there. Like there should be some limit for each type of managers. Some examples are there, like sale or disposal of your fixed assets. Suppose fixed assets might not giving you good result. You want to sell it out, your fixed assets. So who will approve this sales or disposal of fixed asset? Now you can see head of operations let's suppose he might be in a factory. It is coming R. R means just to just R means that he's giving suggestion. Or national after sales manager, he make this. R means just request. And head of operations also request only. But they should also review this one. Who will review? Business controller will review. CFO should also review. Divisional general manager will also review, and then this should be decision. A means just the authority is to the chief operating officer, who will sign okay, that's okay. Sell it out. Another example of the loss or disposal sale of assets. You are selling your assets and it will have a loss. So some people should have only authority just request. Some persons review it. And P means some persons will prepare it, the documents, that okay, this is the suggestion, but then it come to the top, the CEO, who will approve it, that okay, do it, because there is some problem. Another type of example of book value in the companies, you are write off your fixed assets. Write off means just you'll have to just trash assets are there, you'll have to just throw it out. So just think, if it is many people prepare, request some reviews, give their suggestions, and then CEO will approve, but only 500,000 Saudi Riyal. If the assets are less than 500,000, okay, chief operating officer will approve it. Do it. Just sell it out. But if the value of this asset is more than 500,000, then decision should be made by the board of directors. This is just an example. You can think about other transactions of purchasing, for sale, for financial statements, for every other type of things. Whatever you do in the business, you should give authority to different persons according to their limit. And what should be the limit? This limit should make the decision by the directors, that okay, this person we can give this authority. This we give up to this limit. You can give for this limit. So this is an example of authority matrix. If you should do it, then strategic planning and short-term localized decision will make correct in each other. So this is the suggestion to you. Now at the end of lecture, we come to SWOT analysis. And what is this? You might have studied already in different papers. SWOT means S means strength. W means weaknesses. O means opportunities. And T means threat. Strengths and weaknesses are with you. This is your internal, your matter. Strength is definitely positive and weakness is negative. And opportunities and threats are the outside, external from you. Outside, some opportunities are coming to you. You can get the profit. And threats might be coming, some risks might be coming to you. And through SWOT analysis, you can make a decision. I can share some examples. In case of our risks, like strength will be that our trade people are exceptionally skilled. Your trade people, your salespersons, purchase persons are good. They have good experience. We have excellent relationship with our existing customers. You have good relations with your customers and you are selling in a right way. Our work is considered high quality and our services reliable, that people know that your services are good, and that's why this strength is there. Okay, that's good. But for your strength, you should also match your strength with your competitors as well. If their strengths are better than you, or it may be, or you might have better. So just go for the reality. Weaknesses examples. You might have some weaknesses. Some tool of trade are second hand and may be unreliable. You might have some machinery which is not reliable. Aging workforce. Your workforce who are working in the factory, their age is now too much and now they are not working in the right way. Maybe possible. Limited familiarity with new technology. If you start working on some new machines but you do not have familiarity and you do not understand this ones that way, this may be your weaknesses. Might be possible. Whatever your weaknesses are, just make a list for your company where you are working and what are your strengths, your weaknesses, and then match that with your competitors so that you know that you are in a better position or you are lower position, whatever. Opportunities examples may be some examples. The only other plumber is town want to retire. Let's suppose plumber is your competitor. You have suppose plumber firm, and in one city plumber is going out, they are retiring, so you will have an opportunity. You can start working on that city, and as a result of that your sales might improve. A new industry development is currently tendering to outsource trade services. Let's suppose some industry want to outsource their work and you have this strength, you want to work it, you will have an opportunity, you can get it and you can start working on that and it will give good profit for you. Some examples. Threats might have outside that. Somebody from out of town might, by retiring plumber business, let's suppose somebody from out of town, you are going to retire and some other competitor is coming to you. Isn't it a threat for you? A weaknesses? Because as a result of that your sales will decrease in coming future. Another business may start up in town. Competitor is coming to you. Difficulties in recruiting new staff due to skill shortages. If let's suppose new staff you are going to hire in difficulties, you have some problems right now but you do not have getting good staff and not enough staff is available in your city or in your country, then definitely your expenses will increase in future because you'll have to hire from people from other countries. Expenses will increase as a result of that. Loss of an existing employee leaving the business unable to cope with workload. Let's suppose you have workload and your some employees which are very reliable and experienced people, they are just leaving your company. this may have a threat to you as well. So these are some examples. So think about your reality. What is your strength? What are your weaknesses? What are risks coming to you? And what are your opportunities coming to you? Now, what to do? You'll have to prepare the strategic plan. You'll have to think today as well as for some time as well, in future as well, what strengths are coming to you and what are the weaknesses you have. Then identify shortcoming. What are your weaknesses? Identify critical success factors through which way you can improve yourself, which will allow key performance indicators. You can get it KPIs, that how you can get it achieve yourself. Determining the information needs, then setting targets you'll have to achieve, and then continually review of performance measurement, because you know that this is your target, how much you have get, how much is not on process. Think about it. This SWOT analysis is not only for companies but personal manners as well. Just you prepare for your SWOT analysis. What strengths are you have now? What you can weaknesses? What you can improve? What are your opportunities? What you can get the some profit or some other benefit you can get it, and what are the threats might be coming to you in future. Think about yourself. So in next lecture, we will discuss in detail on how to resolve this one. But right now, you'll have to do SWOT analysis about yourself as well as prepare for your company. Just an example. I hope that you might have downloaded the books of this and also some exams and articles and whatever you have studied right now. So just study these books and magazines and these things, and then I hope that your mind will improve. Whatever is not clear to you, just please send your email to me and I can explain you that what you can improve it. Thank you very much. Thanks a lot. We will continue. Thanks.